Hello everybody, welcome back to the channel. It's me, Rob Marsiglio, sales representative with Keller Williams Referred Urban Realty out here in Durham region, helping the great people of this part of the province, doing my best to bring you weekly content on this channel covering all things Greater Toronto Area real estate. This week's focus is on the TRREB Market Watch report that was released. The numbers that came out for January 2024 have led to some shocking headlines like this one. From the Toronto Star, Toronto's real estate market roars back to life, ending a short-lived buyer's market. Data from Toronto's real estate board shows home sales surging in January by 37% compared to the same time last year. So, reading that headline and that intro, you would think, holy moly, the market is on fire. But again, I feel like this is timely because last week's video, we touched a little bit about FOMO, the fear of missing out, some of the tactics that are used. And one of the ones that I said to be aware of was year over year comparisons. And the reason it's so important in 2024 is because 2023 was a historically slow year from a sales perspective in the Greater Toronto Area. And really, that is what resulted in this number mostly, is jumping from 3,083 sales in 2023 to 4,223. That's the 37% change that we're talking about. Now, new listings were also up, not quite as much. Active listings are up from where they were last year and the year before. Average prices, however, are down a little bit. So does that sound like a roaring hot market to you? Not necessarily. And then this number here, property days on market, listing days on market are up close to 30% for both of those metrics. So it's already pretty obvious that a lot is being placed on these sales numbers and classifying this market as super hot, because the Toronto Star touches on the sales numbers and it touches on sales to new listings ratios as the kind of reasons for this market being classified as roaring back. Let's dive into these numbers just a little more deeply. Here are historical Januaries going back to 2009, and these are reported sales in each January. So you can see 2009, we had just shy of 2,600 sales. The next slowest sales month was January of 2023, which was 3,083 sales. And now we're up 37% from there in January of 2024, but still shy of the kind of average going back to 2009 of 4,424. Now, if we're going to be fair and we throw out 2021 and 2022, which again, were really roaring markets from all different perspectives, we're probably really close to the average that we'd expect to see in a January. It's also important to remember that going into last January, we're coming off the back of 175 basis points in rate hikes. We had another 25 basis points in hikes in January, whereas this year it's been 4 straight pauses. So rightly or wrongly, buyer sentiment is probably a little more positive heading into this year. Again, not as big of a surprise now to understand that sales have picked back up to, call it average from historically low in 2024. Now here's one more image, and one that I've shared before about sales, just showing you that the actual sales in 2023, even at the peak in May, lagged what we'd expect to see based on the average and the median years. And really this low point in the fall where we didn't see much of a fall bounce is what led to this next chart. This is the buyer's market that the Toronto Star was referring to from September 2023 onwards, that we are now kind of out of all of a sudden. We peaked in December, which we'd expect, and now we're back to about a balanced market with the sales to new listings ratio being right around 50%. So this had a lot to do with sales staying super low through the fall market in 2023. So it was a buyer's market where buyers weren't necessarily buying. And as you can see, 2024, our sales to new listings ratio is back right to around the average that we'd expect to see. It always comes down from the highs in December, that peak that we pointed out in the last chart, where December, again, technically is a seller's market. Quick recap on those definitions: a SNLR, or sales to new listings ratio, above 60 is classified as a seller's market, and below 40 is classified as a buyer's market. Anywhere in between is really balanced. And you can see that for the majority of the year, Toronto historically bounces between a kind of balanced market to a seller's market. I don't think that's any surprise based on what we've seen over the years in this market. But again, that SNLR, while it is up, it was around 40% last January. It's back up to 50%, kind of right where we'd expect to be at this time of year. So far, I just classify the market as average and like relatively roaring from an activity perspective compared to last year. But from a price perspective, it's anything but roaring. Back to the Market Watch snapshot, and you can see that year over year, the percent change in average sale price across TRREB is down 1%. Now from December 2023 to January 2024, it's actually down about 5.3%. The average sale price was just over $1,080,000 in December of last year. But it would be unfair of me to provide context for the increased sales numbers and not provide some context for the decreased average sale price number. Because as you can see, not every single region in the Greater Toronto Area is experiencing the same thing from a sales price perspective. Durham region actually jumped 4% year over year. Halton region dropped 12.2%, so a much bigger drop. Peel region climbed 0.5%, and York region plunged, quote unquote, 5.5%. Big reason for that shift is the property types that were selling. You can see that in January of 2023, 45% of all sales were detached homes. That's down to just shy of 42% in January of 2024. The exact opposite happened on the condo apartment side of things, just under 31% in January of 2023, up to just shy of 32% in January of 2024. So there were less big home selling this year than there were last year at the same time. And there are kind of more small homes or condos selling this year than there were last year at this time. Another thing that's important to note is where these sales are happening. Toronto and York region, the detached market, are historically the more expensive markets, more expensive than Durham and Peel. And you can see that from last year to this year, there's been kind of growth in the share of detached sales happening in Durham region and Peel region, dropping off in York region, and a big drop off in Toronto. So yes, sales are trending downwards, but I think the importance in the context here is that you can't paint the entire market with a broad brush and say, hey, the average sale price is down this much year over year, even month over month. I think it's important to look at the sales mix, the types of properties that are selling, where they're selling. It takes more time to do that deep dive than just looking at the Market Watch report and making a judgment call based off of that. Now, this isn't to say that home prices aren't coming down. All it is to say is that don't make a kind of micro market generalization about what home prices are doing in one market based on the entire broad picture of the entire Toronto Regional Real Estate Board. I hope you got some value out of this video and maybe a little more context and clarity on some of the numbers that TRREB put out in their Market Watch report. As always, if you have any questions, please leave them down in the comments below. Until we speak again next time, please stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And, while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.